Okay, our first guest for the show is Roopa Kudva, the MD and CEO of Crisil, and she's here to discuss the hits and misses of the Modi budget. Roopa, and thanks so much for joining in. Most of the people have largely applauded the maiden budget by the Modi government. However, there are certain skeptics, like the fiscal deficit target at 4.1% could appear a bit, too ambitious and optimistic. Take us through, where you think the Modi the budget is not meeting up to expectations or is unlikely to materialize the way the intention is.
Hi, thanks for calling me on the show. Before I get to the fiscal math, let me talk about what Crisil sees as the four key themes emanating from this budget. Number one, I think the big theme emerging is clearly infrastructure. If you add up the numbers across the various sectors and the various announcements made in this budget, what we see is that the government is looking at a total infrastructure spend of 2 lakh crore rupees, which is 24% higher than the number for last year. So that I would term as a positive. The second, I would say, is job creation. If you look at the boost that has been provided for sectors like tourism, textiles, construction, mainly road construction, and food processing, all these are highly employment generating industries. We were also quite pleased to see the 10,000 crore allocation for a venture capital fund for small and medium enterprises, because as you know, small and medium enterprises are again the biggest job creators in the country. So jobs, I would say, is the second theme, which again I think is a positive. The third theme clearly emerging from the budget is boosting consumption. How is the government looking to boost consumption? Number one, by increasing the disposable income in the hands of the consumer by the various tax benefits in terms of raising ceilings, the tax breaks, the subvention on housing loans, etc., and also by reducing the prices of key items of consumption like refrigerators, televisions, telephones, and even things like footwear. So I think the consumption boost is the third positive. The fourth big theme, where I think in our view, things could have been better, and where the takeaway is a little mixed from a Crisil perspective, is the whole area of investment in capital markets. While yes, there is no doubt that some things have been done on the investment front which are welcome, like increasing FDI in insurance, in defense, and also opening the doors a little wider for foreign investors in Indian debt markets. We believe that the whole area of Indian capital markets is something where we expected to see a lot more on. If this huge investment of 2 lakh crores per year in infrastructure is indeed to be funded, I think the Indian capital markets will have to play a role, whether it be the equity markets or whether it be the debt markets. And that is one area where we were expecting to see a lot more announcements in terms of enabling mechanisms, including securitization, in order to finance this big spend being looked at. So that area, in terms of boosting Indian capital markets, particularly on the debt side, is somewhere where we've seen a gap.
Okay, some news on DLF, to watch out for that, where they have moved to the Supreme Court with regards to the compact ruling on the 630 crore fine. So it is just an incremental move which is coming from DLF, which was expected. Remember that the Competition Appellate Tribunal had upheld the 2011 order of the Competition Commission of India, holding the company guilty of abusing its dominant market position with regards to Gurgaon. So that fine was worth around 630 crores. So they're trying to contend the order and they are moving to the Supreme Court with regards to that. Mrs. Kudva, good to see you in today. The fiscal deficit target, we were just discussing it with the economist from Deutsche Bank as well, where he said that he thinks it's completely unachievable even in the best case scenario. Would you share the same thoughts?
Yeah, we do believe that the 4.1 number is challenging. We think a 4.5% number would be more realistic to assume, and that is for two reasons. One is we don't see major announcements on expenditure cuts, particularly subsidies. There is nothing in this budget which has indicated a significant cut in the subsidy levels, food, fertilizer, oil, etc. Secondly, the revenue growth assumptions at 17% we believe are very optimistic. We think that this year GDP growth will be a little lower than what we had originally thought. Originally we thought it was going to be around 6%. We think that's going to come down to around 5.5% for a variety of reasons, including a very weak monsoon. Now today I would say is the first real monsoon day that we have seen in Mumbai, but rainfall so far is 43% behind what it should have been at this point in time. So I think GDP growth coming in at slightly lower than originally expected is going to affect revenues by the government, and I think therefore a 17% growth in revenues that has been assumed, no significant expenditure cuts, is going to make the 4.1% number a little difficult to achieve.
Ms. Kudva, you believe that, from an equity market point of view, the union budget has touched the right chords by focusing on the investment climate. So what would be, how do you expect the markets to perform from here on? What would be, Crisil's expectation or the Crisil target on the Nifty, and what could be the kind of GDP improvement that we can see in FY16?
I think long term, let me look at the GDP issue first. I think longer term ability to boost GDP growth will depend a lot on how the investment story plays out. I think that is going to be critical to reviving growth. The second thing that will be critical to reviving growth again will, I think, be implementation of the GST. Implementation of the GST will actually take away the cascading effect of the multiplicity of taxes that we have today. It will make the business environment much less complicated and therefore boost profitability. If profitability of firms goes up, that is what will really lead to a kick-starting of the investment cycle, as people will be motivated and incentivized to make investments. And I think that is going to be key to the investment cycle picking up. I think the budget in itself has a fairly limited role to play in kick-starting the investment cycle. I think what will be more important for the government to do will be to ensure that there is a huge amount of investment which has already gone into the ground, which is not performing efficiently. And it is not performing efficiently because it has hit some bottlenecks. There are issues relating to coal mining, there are issues relating to iron ore mining, etc. And I think debottlenecking of investments which have already gone on the ground is going to be key to kick-starting the investment cycle and pushing up GDP growth levels in the long term. It's really hard to predict where the markets are going to come out. The markets in general have been very positive in the last few months. I think the overall mood is positive, the sentiment is positive, but I think longer run, how the markets are going to play out is going to depend on how the investment cycle kicks in and how the GDP growth story plays out.
Okay. Fair enough, Mrs. Kudva. We leave it at that. Thank you very much for taking the time out and sharing your thoughts on the budget with us. But let's get back to stocks then. There was some news on DLF where they've moved the Supreme